that the Fed's clearly indicated that inflation is coming back as they suspected, and I think that's going to be less of an issue going forward. It's really about that labour market, and I suspect they're pretty concerned, I suppose, that the labour market could weaken quite considerably if they don't provide some sort of support. So the data this week will be key to really the extent, I suppose, of how they'll start to cut rates, whether it's going to be a bit more of a gradual reduction, or if they're going to have to be a little bit more aggressive if that payroll number does disappoint on the downside. But certainly, the outlook, I think, based on that for gold is pretty positive. We've seen, the move in precious metals and gold during previous rate cut cycles being quite positive, and I think this is going to be the case this time around.
Dan, you've lifted your year-end price target to 2,550, but I've got to say there's still a lot of uncertainty surrounding the economic outlook and therefore the rates outlook. So just walk us through why you are so constructive.
Yeah, look, it's certainly a confluence of factors which we think will really drive that price higher, and we're not expecting to see a massive surge. I think the trend is going to be a bit more gradual, at least over the next few months. But that, as I said, that weakening labour market, we think will instigate a fairly aggressive rate cut cycle for the Fed. And as I hinted at before, we've seen pretty strong gains in that sort of environment before. In fact, since 1990, all of those rate cut cycles, on average, have seen gold gain about 6% over that cycle. But as you talk about, that weak economic backdrop, we feel actually provides a bit of haven buying from investors, and then you get on top of that, I suppose, that geopolitical risk premium, which has never really sort of disappeared, but certainly ebbed and flowed over the past few months. So I suspect that, in conjunction with the broader sort of political backdrop in the US in particular, provides a pretty strong tailwind for investor demand, which just adds to that growing sort of level of consumption on the physical side that we're seeing, particularly in India at the moment, but also in China.